Good evening. My name is Rudy, and tonight we're going to do a full training session on Sharetrackin and Compass, but only on equities. So tomorrow we will do the one on CFDs. So for the Sharetrackin and Compass software, when you want to reach the site, for those that don't know, you go to encompass.sharetrackin.com, but also see to it that you have the link as HTTPS. Okay, so it's https:// encompass.sharetrackin.com, and then you will get this site. Okay, and then you're going to enter your username, enter your password, and then say log in. Okay, so once you say log in, it's going to give you your investment dashboard, and then also with a few options on your left hand side. So first of all, once you get to your investment dashboard, so this is the one we're going to be handling is the investment dashboard. The trader dashboard will be discussed in the CFD video. So first of all, on your investment dashboard, the first thing that you're going to get is your account balances. Now, a normal simulation account would usually start with 100,000 in your simulation account. So it will give you a little pie graph, and any other accounts that you do have on this dashboard will also display there. So if I had an extra account created, then it will also be part of this pie graph and also have a name underneath the simulation. So you can have up until I think 4 accounts. That's your simulation account plus 3. So you can have a few accounts that you can go and play on the software. Then on the right hand side, it will show you your profits and your losses. So it will show your income, how much money you've brought in, your expenditure, how much money you have spent, and then obviously your loss or your growth. So if you've made any money, it will go green, and it will show growth instead of loss. In this case, it's showing a loss because we haven't made anything yet. And then on the right hand side, if you have any shares, this I'll show you later on. So if you have any shares, it will show you underneath the market values. For instance, if you had Xaro, Sabania, Vodacom, MTN, PPH, and so on, it will show you each code underneath the graph. With the amount of money that is in each. Obviously, if you've made any profits on those, that amount will increase. Okay. Underneath that will show you accounts. So once again, if you've got more accounts, it will display underneath the simulation over here. But currently we only have the one, so it's got your simulation account with your market balance, cash balance, and investment value. Now, market balance is the amount of money that we have in total on the account. So even if you go and spend some money on the account, it won't subtract it from your market balance, but it will subtract it from your cash balance. Market balance is basically all your shares that you have plus the money that you've got left. Okay. So it's your investment value plus your cash balance will give you your market balance. Obviously, if you had any profits, it would be counted on top of that market balance. So investment value is basically the amount of money that you have spent on your investments. And then total brokerage costs will show you how much brokerage you've paid. So in this case, we have paid 220 Rand so far on brokerages. So that means I've done 2 transactions. So it's 110 Rand per transaction on the software. Obviously, there's other costs also involved on the brokerage, which it doesn't calculate on the brokerage cost. Stuff like your VAT, your STT, your straights, and your IPL won't be calculated on top of that. But every share that you buy, so it doesn't matter through who you invest, if it's through Easy Equities or through IG Markets or Standard Bank, FNB, Absa, Nedbank, you will be paying brokerage fees. Now, brokerage fees, obviously, that would be your banking fees. So if you buy a share, you pay a brokerage fee. If you sell a share, you pay a brokerage fee. And that's the fee that you first need to make up before you start making profits. Okay, so it doesn't matter who you trade, you will be paying brokerage. Okay, so and also depends on who you trade through. So if you want to go through Easy Equities, for instance, for investments, that would be the wisest option to go through because they charge the cheapest brokerage fee, but they have no stop losses for in case. But if you want the stop losses feature extra, then you would go through Standard Bank or FNB, but your brokerage fees would be higher, and you'd also be paying a monthly fee to keep that account open. Okay, so each and every account has its pros and its cons. Then here by the growth and loss, it will show you your growth that you've made or lost. So if you made any money, it will show it in green. If you've lost any money, it will show in red. And the moment you buy your first share, also it would go into red because obviously you're paying brokerage fees. So the moment you buy your first share, that would go red, around about 293 Rand. You would be in the negative because of your first brokerage. Below that, you've got your investment summary for your simulation. Now, as I said, if you've got any other accounts, if you clicked on another account, let's say you had a test account, it would say investment summary for test. So that would give you the name for that account. So each and every one of them will have their own. So this would go through once we bought our first share. Okay, then I'll explain the code, the quantity, unit cost, and so forth. Now, underneath your analysis, first of all, you've got your world market indicators. Now, world market indicators show you what's going on in the world currently, what's going on out there regarding your resources and your currencies and also your market indicators. Now, resources are your commodities, things like your Brent crude oil, your gold, palladium, platinum, your silver. So that will show you if those commodities went up or down for the day. So if it went up, it will show you movement of it will show you underneath the movement, it will show you growth. If it fell, it will show you a loss, or if it didn't move at all, it will show you no movement. So it means that it's still in a sideways trend. So it will show you the name of your commodity, the price currently. So it's currently for Brent crude. So this is in dollars. So it's $111.27 per barrel. And then with your percentage movement, so it will show you it's 3.56% that it went up, and then the last modified date would be today, and so growth means that it went up. Okay, and then also the gold, it shows you gold in Rand. That's obviously per kilogram, and that is in dollars, so that would also be in per kilogram, but that's only in dollars. Okay, and then obviously your palladium, platinum, and your silver. Below that, we'll show you currencies. So what's currently going on with your currencies. Now, currencies is a really important thing, but the main one we're going to focus on would be the South African Rand versus the US dollar, or in this case, US dollar versus the South African Rand. So it's currently 16 Rand and 18 cents towards the dollar. So what we usually would want is we would want a cheaper Rand, for instance, for towards the dollar. For your financial index to go up and certain other shares. And if you want, let's say, for instance, your commodities to do really good, like your minerals, for instance, like Sibanye, Stillwater, and Kumba, and your Anglo Gold, those type of companies, you would want a weaker Rand, for instance, around about by 17 Rand. Then you'd find that your gold prices would, for instance, go up drastically because of the weaker Rand. Okay, but currently it's more or less average. So your mining index isn't really going up, your financials isn't really going up. What we're currently looking for is a stronger Rand, around about just below 15 Rand, for our financial sector, for instance, to start growing again. We show you your percentage movements and your Rand value, and then on the right hand side, your last modified date. So that would obviously be for today, and then if it's made any growth or loss. So if it shows a growth, it means that the Rand has weakened against the dollar. If it shows you loss, that means that the dollar has weakened against the Rand. Okay, remember we are reading it from the first one, right? So your first pair or your first pair code. So your first pair code would be USD, second pair code would be ZAR, and then if it shows growth, it means that the Rand is weakened, okay, against the US dollar. So below that, you'll find your market indicators. So your market indicators, once again, we're mainly going to focus on the South African markets because we're trading on the South African markets. So some other markets like the Chinese markets and the US markets and German markets do influence us in certain aspects, especially if it's hedged stocks, like for instance BHG, which is a hedge. So some companies that are listed in the UK or in China also might influence how our markets go up or down, but we're mainly going to focus on what the J203 does. Okay, so we'll show you the code for each and every indice, the country which is listed in, the change if it's positive or negative. So in this case, this is a positive. So the JSE actually went up for today, 1,300 98 points that it went up. So this also works on a point structure. So it's basically all your different shares all together. Basically all the pricing all together would, at the end of the day, give you your level. Okay, so that would be the main price if you had to put all the shares together. Obviously with your percentage change, how much it went up or down. So this is a good positive that the markets actually went up for today. And then the last updated date, all right, would be today's date. Then underneath that, you'd find your stock movement view. Now, your stock movement view, right at the top, usually when you log it, you'll find a market sentiment, which would show you either if the markets are more in the green or more in the red. So it's more green, it means that the markets are actually more bullish. If it's more red, then it means that the markets are more bearish. And usually what we'd want is that it would be more green, because that would be a positive for us, because that means that the market has actually gone up instead of down. All right, but now the markets are closed, so it tells us the markets are closed with the day, the month, and then what day it is, the year, and then the time. Okay, below that, we'd start off with the top 40 blue chip shares. Now, this is the most known South African shares in SA. So you'd find things like BHG, which is BHP Billiton, BTI, British American Tobacco, Anheuser-Busch, Process, Glencore, Compagnie Financial Richmond, Anglo, Naspers, AMS, and so forth. Okay, so each one of these will give you a 3-digit code. So every company has a 3-digit code. If you want to know what the name is of that code, all you do is you just click on the share, and it will show you what the name is. So that's BHG Group Limited. If we go and click on the next one, BTI, British American Tobacco PLC. So every one of these is clickable. So you just click on it and it will give you the name for that company with a little bit of research on it. So it will show you a little bit of information on the company. Okay. So some of them do, some of them don't. Like BTI, for instance, shows you exactly what they're all about, where they're listed, where the residential address is, postal address, year in, when is the year in, with the website. So if you want to go and visit their websites and stuff like that, you'll be able to do that. And then also we'll show you the last price, the current price of the share, and then the movement it made for the day. So we'll see that most of these, so it's more or less a 50-50 at this stage. So you'd see that it looks like there's more green actually on the top 40, but what we usually want is that most of them go into a green. Okay, now if we go and look at these shares, this would be one of the lists that you would be trading off of. Okay, so this one, and obviously the winning shares list. So winning shares list and the top 40 would be your two main lists that you would be working off. Okay, which is also part of the T's and C's. Okay. So the top 40 blue chip shares, as I said, they are the most known companies in SA, and that would be the list that you would want to trade off of, because they usually have the best movement on the JSE. Might it be positive or negative? So if you're a CFD trader, for instance, then I mean, today would have been a really good day if you're looking at all the negatives. Okay, then underneath that, you'd find your top 10 volume. So this volume that it gives you over here, that is the amount of shares that's been traded for the day, and not the rand value of what's been traded for today. Okay, or the amount of transactions that's been done. That's the actual amount of shares that's been traded. Okay, that's not actually for the day, that's for the month. So if we look at FSR, first rand has got a closing price of 66.81 with a volume of 28 million. So that's for instance for the last month, for the last 22 trading days. Okay, so if we click on it and we click on details on the left hand side, this would actually show you what the volumes have been traded, the opening price, the highest price, the low, the last price, the change, percentage change, and the amount of deals. Now that is the amount of deals that has been done for the day. Okay, so volume and deals. All right, so that would be deals, that would be a volume, but doesn't show you here the rand value that has been traded. That you can find on the filters, which I would be showing you later on. Then your top 10 best and worst performers. Now these two lists only show you the best shares for the day and also the worst shares for the day. So if we look at the left hand side list, NPH would have been your best share for today with a price of 187.36. and then a movement of 12.8% for the day. So that's the best overall performer for the day. And then if we look at the right hand side one, this one isn't sorted like the left hand side one, but for instance, TMT was the worst share for the day, which fell by 24.22%. Okay, with a price of £2.91. Okay, sorry, even this one, Nutritional Holdings, was even worse. I mean, that thing, I think it traded at 2 cents and just fell down to 1 cent again. Okay, actually, it would have been 100% loss because it went down. Sorry, 50% loss. I think it might have even traded at 3 cents then. Okay, if it's on 96. All right, and then GLI also went down with 50%. So this one was on 2 cents, for instance. Okay. So that just shows you your best and your worst performers. Then your price earnings average, so your PE ratio. So this shows your PE averages on each of your sectors. So in basic materials, your PE average, your price earnings average in cents is £2.42. If we look at your financials, for instance, this one would be the best. So it's £7.69. So that would be your best sector to be in. So this just shows you which of the sectors would be your best and your worst sectors to be in. So the low your PE average, the worse that sector would be, for instance. But also we need to look at another thing. Those sectors, like for instance telecommunications, don't have as much shares or as much companies as the financial sector does, or what the basic materials even have. Okay, so you also need to keep that into consideration when you're looking at the PE averages of those sectors. In your top 10 shares bought by clients. So this list changes as clients trade on the Sharetrackin software. So the more people buy Sasol, for instance, the more that share would grow on the list and eventually be on the top of the list. The less people trade on Sasol, for instance, that share would go down from the list and eventually be removed from the list. Okay, so it will show you the codes for the companies that clients tend to trade. So this is the top 10 shares that clients tend to trade, with the name of the company and then the movement for the day. We will see that all these shares have actually hit a positive. Okay. So some of these shares, for instance, might have been shares on StockPix or on the Golden Goose. So this list would obviously update as we send out StockPix and also Golden Goose notifications. And also we started with the Telegram now to be a little bit more active on the Telegram. So you'll be able to find shares there, and this list would change according to that as well. Okay, so the more people trade those types of shares that we send out, the more this list would update. Okay, then your stronger stocks, percentage above 200-day moving average, and weaker stocks below 200-day moving average. Those are based on 200-day moving averages. So I'm quickly going to go and explain it on the Chart IQ. So I'm going to open my Chart IQ and just remove everything from here. We'll add that again later on. Just delete that. So what you'll find is, first of all, let's just take a share. All right, I'm going to take HCI. So HCI. So you can just type in the code left-hand side corner. You can just type in a code and press enter, and it will update the chart for you. Okay. Now, the 200-day moving average works as follows. So first of all, you go to your studies, right-hand side at the top, go to moving average. So second one on the right-hand side, click on moving average, and then type in 200 in the period. So that's a 200-day moving average which you're creating. Leave the field on close, leave the type as simple, don't change anything except for the period, and just create this red line. Okay, now this 200-day moving average line that's got here, that's basically to show you if the share price is above or below average for the last 200 days. Obviously, this one we can see is above the 200-day moving average. So the main chart is above the 200-day moving average, and that's basically where we would want the share to be, is above the 200-day moving average. Okay, so what we don't want is the share to be below this line. For instance, if you go into historical data, then we'll see the HCI previously was way below this line. I mean, it even fell in 2020 with the COVID. With COVID, sorry about that. So with COVID, it fell even lower below that 200-day moving average line. Okay, so that's usually where you don't want your share to be, is below its average. Okay, because then usually it would struggle to get back above that line. If you get a share, for instance, like TCP is a really good example of a share that tends to stay above that 200-day moving average. Okay, so that would be a good share to go with if you want to go long term, for instance, because it's always above this 200-day moving average line. Yes, over here it did fall because of COVID, but it did retrace again and go back onto its trend. Okay, and even a stronger trend than what it was previously. All right. So these two lists, basically, what you would want to do is you don't want to trade with the shares that's already way above that line. Okay, because I mean, HCI, for instance, if we go back to HCI, this share, for instance, is way overbought. Okay, so it's overextended and it might come down very soon. All right, also depending on your fundamentals, so fundamentals would also be a really important thing to look at on your shares. So it might be really important to go and look at your HCI fundamentals, go read up on the share and see why the share is doing this good. Or it might be because they've got new products that are being released, or they've got good CEOs running the company, or it might be any fundamentals might push the share to do that, to do really good like this. Okay, so it might grow even further, but be careful of shares that's overextended like this, because it can retrace really hard and go back to its original trend. Okay, so that's why I wouldn't trade with shares that's at the top of this list. I would go down with the shares that's at the bottom of the list, because they've got better potential of growing on this ladder and climbing the ladder to the top. Okay, until it reaches there. When it reaches there, then obviously it would be a share that you would look at selling because it's way above that line, or you would have a really good stop loss on a share like that if it's way above the line. Okay, it doesn't mean that it's going to stay there forever. It might come down with the ladder again. Okay, so I would always look at the shares which has got like smaller percentages. Okay, which isn't that overextended. If you're looking at your weaker stocks below 200-day moving average, this time it's just the other way around. If we look at PRX process, we'll see that it's way below the line. So in the beginning, it did do really good, and now the share has gone down and it's below this 200-day moving average. And this is why this piece over here is why it's really dangerous to trade below this 200-day moving average, because it might look like a share would recover below this line, but it can bounce against the 200-day moving average and come back down. Okay, so you don't want to trade the share when it's below this line, because you never know what's going to happen. It might just bounce on the 200-day moving average and come back down. Okay, now the same principle applies to this list. You won't trade with a share that's below this line. You would, for instance, trade with a share that's lower on this ladder, which can go over to the your stronger stocks. Okay, so same thing. I would rather go for a share that's just below that line, but I won't buy a share which is on this list. Okay, I would keep it on a watch list, for instance, for a while until it's above the 200-day moving average. All right, so I won't just go and buy it. I would wait for it to go above that line and then just continue with a good trend, instead of buying it down here and waiting for it to break through, and then it doesn't break through, and then it has a hard retracement. It just then it just dumps down to the bottom again. Okay, so you don't want to really buy below that line. Okay. Then you've got your positive share sector movement and your negative share sector movement. So this takes the sectors. So in basic materials, for instance, in NPH would be the best share in that sector, where in basic materials, APH would have been your worst share in that sector. So it only shows you in those sectors which is your best shares and which are your worst shares in those sectors. Okay. Then next you'll find Satchex and exchange traded funds. So Satchex and ETFs we don't really you can buy Satchex and ETFs on the software, but they're groupings of shares. So for instance, STX 40 would be a grouping of your top 40 blue chip shares. Okay, and for instance, STX Fin would be a grouping of all your financials, and STX IND would be a grouping of all your industrials. So you can trade with them on the software. You can even go pull up the charting of these indexes and go and trade with them, but we don't really recommend doing it on the software, on the simulation. You can do it on any other account, create an extra account and go practice with it there, but don't buy it on the simulation, okay? Because these don't count as physical shares, they count as indexes, all right? Because you're trading with the physical index. So it's a bunch of shares all bunched together, okay, at a certain price. And the same with your ETFs, exchange traded funds. Now ETFs, when you open a banking account or a trading account, let's say through Standard Bank or FNB or Nedbank, ABSA, or even Easy Equities, so all the places that offer you equities, you would find when you open that account, you would automatically have a tax-free investment account. Okay, now the tax-free investment account is limited to 30,000 per 30,000 per year and 500,000 lifetime. So it means that in your lifetime you'd only be able to deposit 500,000, but annually you'll only be able to deposit 30,000. So there are some rules on an exchange traded fund account, on a tax-free investment account. Okay, and these same thing. It's usually a grouping of shares. Like for instance, STX 40, I know, is also listed on this list. So if we scroll down to down here, STX 40, and yeah, IND Industrials is also, Financials is also listed here. So those are all groupings. Okay, there's STX 40 also listed. So these are all groupings of different companies, and also some of these are listed overseas. There's GLD, for instance, also GLD, also that's a single entity, but in that single entity in GLD, there's ETFs, CFDs, and equities. So all three of them would be listed underneath one, for instance. Okay, so they've got three different types of things that they trade, and all of them are listed as one, okay, on one price. Is even in the Canadian top, I think top 50, and the Chinese top 500 is also listed on this list. Okay, and the ETF 500, all right, is also a grouping of about 500 ETFs listed all around the world. So yeah, the movement on them is really small, so you don't expect to make too much on ETFs if you trade with them on a tax-free account, but it is possible to even trade it on the software. I mean, you can go and physically click on it and go to buy shares, all right? But if you go to Charts IQ, for instance, it will show you a blank chart because there isn't any charting for ETFs on the Sharetrackin software, okay? Because our main focus is stocks, all right? Shares, in equities and CFDs, okay? Winning shares list. So this list is a list that Morishima Gama, one of the top 3 technical analysis in our country. So she would first of all give you her watch list, a guru's watch list with the Remgro, Standard Bank, ABSA Group, famous brands, Stochastic, and so on. And this list will change, all right? So as she finds other shares, this list will update with those different shares. And then also consider, so at the bottom, she would also list some extra ones, which isn't on her watch list, but she does name a few extra, so which you can also go and have a look at. Okay, then latest performers. So on the right hand side, we'll show you the latest performers. EOH Holdings with its latest growth of 19%, Telkom 12%, Sappi 10%, Vukele with 6%, and FirstRand with 4.9%, almost 5% growth. So those are the latest performers, which is listed on her recently added winning shares list. Now you'll see that some of these shares did really good, like for instance, Sasol went up with 84%, Marefe went up with 20%, and then Sappi went up with 10%. Some of these went down, but that's because of the markets being really volatile at this stage, right? So it's at that stage now where it's getting out of the volatile markets. So it looks like the market do want to recover. There is a good chance the markets are then going to start recovering within the next week. So I would really keep an eye out on the markets for this coming week. Okay, then next, you'll find your charting tool. Charting tool you're never going to use, so you don't even need to look at the charting tool. You're mostly going to use your Charts IQ because the Charts IQ is a more advanced chart, and it's really easy to understand. Okay, so I won't use the charting tool, and the charting tool is a bit slow. Then your heat map. Your heat map just shows a little bit of a map on which shares are the best shares for the day and which shares are the worst shares for the day. So if it's green, it means that the share did really good. If the more red it gets, it means the worse the share did on the JSE. Okay. Then your positive growth. So same thing, your best share would be listed at the top and your worst share would be listed at the bottom, but it's still a positive growth. And your negative growth would show you at the top red, so that is the one that did the worst, and at the bottom this one only fell by 1.41%, so it didn't do as bad as Finland APH. Then top 40, this one is a bit of a mix-up. So RNI, for instance, would be the worst performer for the day, where AMS would be your best performer for the day on top 40. Okay, so that's on your top 40 list. And then your watch list. So if you've got shares on your watch list, show, for instance, your best share on your watch list and also with your worst share on your watch list. So you can even go and create your own watch list if you really want to. Okay, with your own shares that you would want to keep an eye on. Okay. And then the stocks page, we'll get to the stocks page in a few. And then the golden goose, we already did a video on the golden goose. So if you really want to know about everything on the golden goose and how it works, you can go to education, go to our webinars. So go to education webinars, live webinar archive, and go and look for the for the latest golden goose video, which is this one of your Sharetrackin Golden Goose. All right, that's also an English webinar. That's video 505, where we explain how the Golden Goose works, how to go and draw in your support and your resistance lines with your positive growth and your negative growth lines. Okay, so that is a video that you can go and watch to see how the Golden Goose works. Okay. Next, you find your accounts. Underneath your account, you'll find invest. Invest you don't need to use. There is an easier way around to go and buy and sell shares. So you don't need to use the invest option. So that will give a skip. Financials, this would show you your financial, basically like a financial statement of everything that you've done so far on your simulation account. So current holdings, we don't have any current holding. Don't have any shares. Safety ratchets, we don't have any shares, so it won't show us any safety ratchets. We'll go through this later. Transactions, so this would show me, for instance, which share I've bought and sold. So there I've bought CLS and I've sold CLS with the quantity, the price, the brokerage that I've paid, the amount that I bought and sold it for, the comment that I've made, and then also the status. Right. So if a share, for instance, is bought, it will show you that it's still active. Okay, it won't show completed. It would only show you that the share is still active if the share was still underneath our current holdings. Then with your cash flow, so cash flow shows you where your money has gone to. So deposit with 100,000. So over here we bought a share, so that's the withdrawal, and then we sold the share again, and then it deposits that money back into your account. Okay, and then at the bottom here, that would be your cash balance. Okay. So what you would be basically left with. And then income expenditure, so there's some expenditure where we bought the sold, and income when we sold the share, and then total what your balance after that was. If it was a positive between these two, then obviously we would have made money, but we didn't make anything because we bought and sold immediately, go one after the other. All right, I'll go and show you how to go and transact so you can see your safety ratchets and also your current holdings. Underneath your manage accounts over here, you can go and create extra accounts. So if we go to our account type, you can either create investment or a trader account. If you don't have the Forex, then obviously you won't be able to create a Forex account, but all of you should be able to create an investment or a trader account. So if I want to create an extra investment account, I can just click on investment, go and give it a name. So let's name this one test. Give it an amount, so you can put in 100,000 and or any amount that you would want to, and then your account opening date, which would be today, the 13th, and then we just click on create. It'll create that extra test account for you with your 100,000 in your invest account. So if I have to go back to my dashboard, investment dashboard, there's my extra test account. Okay, if I want to delete the account, all I do is I go to account, go to manage accounts. On the right hand side, click on the delete. So I just click on delete. or on the little dustbin next to it and say yes. If I want to add extra money to that account, I can do it. You won't be able to do it with your simulation though. You can only do it with any other extra account that you have created, like the test account. You can go to that action button, click on it, and you can deposit or withdraw. So if I want to, let's say, withdraw 100 on that, I just say withdraw, and it deducts that from that account. So you can more or less, if you have an investment account or trading account, let's say through Standard Bank or through ABSA or Nedbank or through Easy Equities, and you want the two to basically balance as you deposit and withdraw money, you can go over here and edit your amount. Okay, underneath the deposit and withdraw. Okay, so for now we're just going to delete the test account. We don't need that. We're going to buy and sell on the simulation account. Okay. Next, you'll find your calculators. We'll use the investment calculator later before we buy a share, because that's a really, really important calculator to use. And then your financial independence calculator. Now, this financial independence calculator, basically there to tell you when would you, as an individual, start to become financially independent by only using your salary, putting a certain percentage of your salary aside every month, and also having a bit of money saved up, and then also investing at the same time. So in this case, it tells us that, okay, our monthly salary is 10,000 with a future inflation rate of 6%. So it means that we have a 6% increase annually. And then your capital you have saved, so let's say we've got 5,000 rand saved up. Your savings rate, 10% of your 1,000 rand every month that you'll be able to put aside, so that's 1,000 rand every month, and then your return is 30%. Now we can obviously change that to 40%, because that is what the guarantee is about, is the 40% growth. So if we could click on calculate, it shows us that we would take, if we have to invest, all right, so this is just with this rate here, with 1,000 rand every month that we've got, that we put in extra, and then your capital that you have saved is 5,000 rand. That's excluding the profits that you put back in. Okay, so that's basically excluding the profits that you can reinvest. So it would take you 7 years and 6 months before you reach financial independence. If you start investing and you reinvest your profits, okay, then you won't take that long. You might even be able to half that. All right, if you're trading, it might even be 1 year before you reach financial independence. So that's if you want your money to start working for you and you don't want to work anymore. All right, so with this rate basically, and with your salary, for your investments to surpass your salary, you would take 7 years and 6 months. So that means you'd basically still be living on more or less 10,000 rand a month. Okay, but obviously if you reinvest your investments, that would be way more, okay, than just having your 10,000 per month, because this is basically just to replace your salary. Okay, so then underneath education, you'd find your lecture modules. So underneath lecture modules, you'll find, first of all, introduction, technical, fundamental, and economics. So this is a few modules that you can go and work through, that you can also go and write exams on. Okay, so for instance, underneath your motivation, if I click on more, it will give me a whole lecture module on your motivation with 2 videos at the bottom. So once I've gone through this entire lecture and I watch both videos, I can go and write an exam on that one over there. Or if I go to technical, same thing. You've got about 9 fundamentals, you've got 6, and underneath economics you'll have 3, and introductory you'd have about 20 to go through. Okay, so there is a few lecture modules to go through and a few exams to write, and the passing rate obviously for the exams is 50%. It used to be 80%, but we thought, okay, we'd half that, we'd make it 50% just to make it a little bit easier. But some of the questions is hard, but it's not there to catch you out. Okay, it's about basically learning each and every aspect on that module to really answer the questions, but it's not hard questions, and there's not a lot. If you go to exams, for instance, and if you go to introductory, you select your module, your motivation, and you say start exam, it will start asking you a few questions. So I'm just going to randomly answer these, and then once I'm done with these, And as I finish, it would show me if I passed or failed. Obviously, I've failed this one a few times. It's because of webinars. Okay, so we show you your result, your score, the module that you've did, the category, and the date. Okay, which you've done it on. If you fail it, you can go and do it again. Okay, but the passing rate is 50%. So, like for instance, this one, 3 out of 6 is a pass. All right. So obviously you would want to have more than that. Then webinars. So these webinars underneath the Sharetrackin webinars, the first tab, all of these are listed underneath the lecture modules. So not all the lecture modules have videos, because I mean there's more lecture modules than there's really videos. But you can go through all of these first and learn everything in the videos and then go do the lecture modules. But I would rather prefer go through the lecture modules and watch the videos as you go along, right? Because you would learn more about those certain modules. Okay, then live webinar archive. So these are all our webinars. So if you missed any webinars in the past, let's say for instance you missed this one of your financial shares outperforming the all share index. So there's a few shares that's outperforming the current market with the date that it's done on. If you've missed that one on that date, you can always go and watch it afterwards. So for instance, if you missed this webinar, you can just go and watch it over there, because we will list it underneath live webinar archive. Then Sharetrackin tubes, there's a little bit more advanced videos, like for instance, what is equity, how dependence, how to reach financial independence, candlesticks, how to reach your financial year-end results, what is earnings per share, what is your accounting period, balance of payments. So there's a little bit more advanced videos if you want to go through that at a later stage, but for now, stick to the basics and then learn the advanced stuff a little bit later. Okay. But I would say a thing that's really important would be the one underneath equity. Okay, because equity also explains to you what is a equity and how does a equity work. So I would say after watching this webinar, for instance, a really important one to go through would be equity. Okay. And then webinar bookings. So if you want to make a booking for a certain webinar, just change your year to the current year. You don't need to change the month. The month would always change. Click on go and it'll give you all the webinars for the month. Okay, so you can go and pre-register for webinars without even receiving an email. Okay, so you can go to this and go and register for a webinar. Okay. And then next would be your glossary. So any words or terms that you don't understand on the software, or anything that you read in a newspaper that you see that's to do with with trading, you can go and search up the words. So if, for instance, you don't understand what stochastic is, you can go to search glossary, type in the word, click on the word, and it'll give you a description of that word. So definition with a little bit more information. And some of these words, if you click on them, like moving average, it will give you the definition of that, with some of them even a video that you can go and watch, all right, on that specific word. Or click on chart, explain to you what a chart is. All right, so every one of these red words would give you a description. Some of them don't, so some of them are only red, but you can go and obviously go and Google some of those words as well, right, to see what they mean if you click on it and it doesn't give it to you. But most of the JSE words are already listed on this list. So this is your dictionary to the JSE. All right. Then news and information underneath market news. Now this tab, just bear with it. It does take some time to load in, because there's a lot of information. You can scroll while it's loading, but this basically loads all the information for the day, all the news that has happened for today. It's going to load. So it goes and pulls it from a few sources like MoneyWeb, and SABC News and MSM News, ShareNet, Tech Central, SA News. So there's a few. I mean, there's the Mining Weekly, Tech Financial. So this basically pulls it from all around the country, and it gives you the news on all the shares, so that you'll be updated at all times with what's currently happening in the markets. Okay, so the more you know, the better. Okay, So this is a really important page to go through, and this means you also don't need to go and buy the let's say for instance the business daily and stuff like that, because this all that information would already be on this market news. Same with the Sense news. All right, so your stock exchange news services, this one also takes a while. It just doesn't give you a little circle, so it will load eventually. But the Sense news also gives you information like what the market news does. Okay, market information. This gives you a list of all the shares once again with the code, the company, the sector which it's trading in, and its subsectors. So the companies do have a sector, like for instance financial services, and then a subsector which for instance would be loans. Okay, and then the link to the website, and sorry for that. So then also status, if a share is suspended or active. So some shares, for instance, relist, like ABL, for instance, is now AXL. Okay. And then ASA, for instance, which was up before, and there's now ABG. Okay, so some shares would be relisted. And there's also news sometimes on those shares, like why did ABL or why was ABL suspended in the first place? All right, so the reason for ABL suspension, for instance, was because of loans. All right, they had a lot of loans, and 65% of their client base didn't pay back the loans, so they were suspended on JSE, because obviously all those loans caused them to crash on the market. And then once they got most of those loans paid back, but with help from European companies, they relisted as a new share on the JSE, which was AXL. All right, so mostly fundamentals would get shares suspended, and sometimes even insider trading might get shares suspended. All right, on the JSE. And then your JSE index reference gives you all your codes, your index reference codes. Like for instance, the all share index would be J203. There's our FTSE JSE all share index, and then the JSE top 40 would be J200. So all your sectors, in things like your industrials would have its own code, financials would have its own code. So those sectors would have its own index reference, which you can go and pull up on Charts IQ. So if I change this to J200, J200, press enter, and then we'll show you what your top 40 blue chip shares are doing. Or if I change it to J201, it will give me the index reference for J201, or the chart for that index reference. Okay. Then your list of stockbrokers. So once you are ready to go and invest, you can go and open yourself an investment account through any one of these companies. But also note that some of them don't have online services, and that's what you really want, is the online services. So if you only want to invest, you would go to Easy Equities website and open an account through Easy Equities. So you just go to the link. You can even just click on the link, and we'll take you directly to the Easy Equities website, where you can go and open an investment account. If you want to trade and invest at the same time, then you'd use Standard Bank, okay, because they have both options that you can use. All right, if you only want to trade, for instance, then you go through IG Markets. Okay, go to IG.com and open an trader account through them. Okay, so next we would have our media. So we've got a Facebook page, Twitter page, and a blog. So I would recommend that you go and join the Facebook page and our Twitter page and go and see what we have to offer on our Facebook and our Twitter. Now, Facebook is a closed group, so if you want to join the group, it will ask you to click on join group and then fill in your ID number or your cell phone number or your serial number. All right, so that I've got information to pull on our system to see if you are a client, and also accept the T's and C's, which is really important, because if you don't accept the T's and C's, but you put in your number, then we will not accept your application to join the group. Okay, you must accept the rules and also put in some of your contact details so we can pull you up on the system to see if you are a client. Okay, so you must do both. So once you're part of the group, you'll be able to see all our video content and also the shares that we're now posting. For instance, we are currently tracking a few good shares on our trader account, which we would also go and post on Telegram. So it's really important to go and join our Telegram group also. So if you want to join our Telegram group, just send me an email to Rudi@sharetrackin.com or to media@sharetrackin.com with your contact numbers. Okay, your name, your surname, and your contact number. That's all I need. And then I would go and add you onto the Telegram group where you would find really good shares which we send through on the stock picks, and also some really good CFD shares which you would be able to go and trade. Okay, so investment opportunities and trading opportunities that we would be listing on the Telegram, which would be really important to go and follow. Okay. So now we're going to get to the fun parts on the software, and that's to go and analyze and filter and buy a share. So we're going to go to analysis, and we're going to go and click on stocks underneath, and then underneath stocks, we're going to go to first thing, we're going to go to my stocks and watch list. So underneath my stocks and watch list is our stocks page, or stocks that we have bought. So currently we don't have any stocks, so it will show you all your stocks that you have bought, and on the right hand side it will show you your watch list or shares that you have added onto your watch list. Okay, and then on the right hand side some price movements on any one of those shares. So if I click on a share, let's say Sasol, it'll give me a price movement, right, with a comment that I've made on that share. All right, so any share that you go and add a comment on, it will show underneath there. Okay, I'll also show you how to go and add a share to the watch list and make that comment. Okay, if you leave it empty, obviously what's going to happen is, let's see if we find anyone without a comment. I think it's on the last page. All right, no, not one of my shares, but usually, okay, that one does. All right, so this one over here has no comment. All right, if you don't add a comment, it will be blank. All right, but usually I will add comments onto my shares, especially with the date. Okay, so I would add a date as my comment, so I know to go and backtrack onto that date when I've added the share on my watch list. All right, but if it's really specific, I would add a little bit of a longer comment on that share. All right, saying what I'm basically looking for on that share. All right, before I buy it. Then the share filter. So the share filter is a little bit more of an advanced filter than the additional advisors. Now you'll find that the additional advisors might work a little bit better for you than what the share filter does, but we'll work through the share filter in any case. Now the share filter has different lists. Now the first list is all, so that is basically all the shares which is listed on the JSE. Winning shares list is a previous winning shares list that we had. So this is about 100 shares which is listed on this list, which you can also go and follow. Most of them would be top 40 shares. So 40 of these would be the part of the top 40, and the rest of them are shares that we have added as time went by. And then there is a top 40 list also. So if you only want to see the top 40, just click on top 40 and we'll give you a top 40 shares. And then your mid-cap shares. So mid-cap shares is a little bit more of your more cheaper to expensive shares. So it's not really too cheap or really too expensive to buy. This would be more or less the shares that you would be interested in investing in the beginning, all right? Because these shares aren't too expensive to go and buy. Okay, and then your broker forecast will only give you show you what the brokers are currently doing, telling you if those shares are in a buy or in a sell trend. Okay, then underneath that it will show your watch list. I wouldn't recommend using your watch list over here. I would recommend using the watch list at the top there, because that would be the better list to look at. And then ETFs, exchange traded funds, that's the entire list of ETFs, the same that we had on the stock movement view. Your futures and options, and your unit trusts. These we don't really use on the software. As I said, this filter is a little bit more of an advanced filter, but futures and options and unit trusts, I won't recommend using those lists if you don't know how they work. Okay, so we're going to give them a skip because we're only going to focus on equities. Share performance, this would show you year-to-date performance. Now, the reason I'm not clicking on these lists are because they really do take a long time to load up, and that will take up our time for the webinar. So these lists do take up some time to load, all right, especially things like your unit trusts. The equity market is something like 300 odd shares which is listed, where your unit trust might be like 1,000 different unit trusts which is listed. Okay, so that really takes a long time to go through and calculate everything, all the moving averages and stuff on your unit trusts. Same with your share performance year to date. It needs to go through 3 years worth of information before it calculates it, and then give you the information. So these lists do tend to take up some time. All right, these 4 lists that take some time before it really gives you any info. Okay. But you can click on it and it will give you info on it, but it will take time. Okay, so we're going to work through the share filter quickly. So first thing that you'll see is it will give you the code of the company, the name of the company, the sector which it's trading in, and then the market cap. The market cap is in millions. Okay, so if it gives you a normal value without a decimal, so if you're looking at the first one, ABG, for instance, market cap, without the decimal, no, sorry, no, I'm talking nonsense. So that is 13 million, 13 million rand worth of shares, which is in its current market cap. If you're looking at the next one, AGL, is a little bit more, and the higher the market cap is, obviously the more shares are there for you to go and trade with. I would have actually liked them to put it in the exact value of the amount of market cap which is left for you to trade, but there is a few surprises with the software that is coming, which is going to do way better than the current format that is giving in the market cap. Okay, then rand, your traded value, this is the actual rand value which has been traded for the last month. So these figures are actually correct. So let's see if we can find a lower value, because some of these are really high. Okay, none of them really have lower values. Let's take it on all and see if we can't find smaller values. Okay, there we go. So over here we've got, for instance, on ACS, we've got 4,245 rand, which has been traded for the last 22 trading days. So that's really low. We want higher traded values. All right, so the higher traded values, the better, because it means that those shares have really been trading, and that's obviously buying and selling. That's not only on your buying. So the higher your traded value is, the better, and that also goes for your volumes. All right, so obviously the higher your traded value is, the higher your volumes would have been. Okay, so that would be your first filter that we will filter out. Now there is a share filter example that you can use. So you just click on your share filter example. You can ignore the bottom block of here. That's actually got nothing to do with your MACD or your stochastic. So you can totally ignore this T1, T2, and T3 at the bottom here. You're going to work with your main filter at the top here. So you'll see that over here we've got some examples. We've got traded value greater than 200,000, day change percentage delayed greater than 0, and your percentage change from highest greater than -15. So I would go and quickly explain that to you also, how that works. And then also with your T values, T1, T2, and T3, which each of them works with a moving average. So T1 would be a 20-day moving average, T2 would be a 10-day moving average, and T3 would be a 5-day moving average. And that basically works with crossovers on the charting, which we would quickly go through and show exactly how those moving averages work. So that's got nothing to do with any stochastic or any RSIs or MACDs or any other indicators. It's mainly moving averages, which these are being calculated on. Okay, so what you would want to do is first go and filter out, because you've got a long list of shares to go through if you don't have any filtering. Okay, so that's why we've got the filtering built in to make it much easier for you as an individual. So if you go to traded value, that's going to be your first filter. Now you don't want any 0 values in between or any lower values, like for instance 4,000 on your values or 2,000, 5,000 on your values. You want all these smaller values off of your list. So you're going to change that to greater than 200,000. and then it's going to filter that out for you and give you all the shares that's been traded more than 200,000 for the last 22 trading days. So obviously the higher that is, the better for you, because it means that you'd be able to buy easily and also be able to sell easily, because there's more people which has bought and sold on those shares. Okay, so the more people see that share and the more people that trade with that share, then it means that you have a better chance to sell your shares on the day which you want to sell, eventually sell your shares. Okay, so, and also it means that that company, for instance, if we look at the the traded value in ABSA is a really well-known company, and everyone knows ABSA. So more and more people would go and trade with ABSA. If you look at Standard Bank and ABSA, if you look at Afrimat, for instance, a well-known company, Anglo Gold, well-known company, Addock, man, where's the one that I just saw? Addock Ingram, also a really well-known company. So well-known companies will also have bigger traded values, right? So the bigger the traded value, the better for you. Okay, then the price EOD, that's the end of day price. So this would be the closing prices for the day, and it will always stay end of day. So for instance, this list will only update Monday afternoon at 5 again. Okay, with the end of day pricing. The day change percentage delayed, that would change. So every 15 minutes your percentages would change. If you obviously want to see the current price of the share, then you can go to the chart, type in the code, press enter, and then on the right hand side it will give you your price, what it's currently listed at. Okay, so this would be, for instance, yesterday's closing of 165.02, and then today's closing is 167.47. All right, so you'd see that it has increased from yesterday's pricing. All right, so this is the next thing we're going to change. We're going to change that Dutchess percentage delayed to greater than 0. Okay, all right, and it's only going to give you all your positive growers. You don't want any negative growers on this list. You only want your positive growers, because you want to see which shares has actually turned around since the previous day. Okay, so it means that those shares might be going in a bullish trend, like for instance ABG. All right, then next would be this one over here, percentage change from highest. Now percentage change from highest would be the percentage change from its highest point in history. Okay, so just to give you a really good example, if you go look at, I think it's, let me just quickly think, I think it's ACL. No, sorry, it's not ACL. I think we can use ABSA even. Okay, no, we can't. In any case, I can't even remember what the code was, but there is a share that fell like 99%. If we can, AnklerMittel, there we go. It is ACL, AnklerMittel. I'm correct. ACL, AnklerMittel. So AnklerMittel, if we could go look at the historical data, this year has fallen from that point up until the current point with 98%. Okay, so if I had to take my crosshair, so the crosshair way over here, I mean, this share was the highest price that this share ever reached was 253 rand and 10 cents, and it's currently trading at 7 rand and 76 cents. Okay, so that's the current price. So the share has fallen by 98% since its highest point in history. Okay, we want to cut out certain shares off of our list, shares like this, which has been falling for a long time. But it can be a negative thing as well, because shares like this has actually been going up since after COVID. All right, so COVID isn't really over, but I mean, in your 2020 period, you can see that it still fell. And once we lifted some of the bans on or some of the restrictions in South Africa, most shares in this vicinity of here went up. You can go and look at any share. Let's type in TCP, Transaction Capital. So TCP, for instance, only fell in the beginning of 2020 and then crossed over in the same, more or less the same spot where ACL crossed over. If you go and look at any other share, for instance, you'll find the same thing. Okay, so on that crossover is where most of your shares actually recovered, even shares that did really bad like ACL. Okay, so you would be cutting out some shares if you filter on this, but it is recommended on the share filter that you do the filtering on this. Okay, but you will be cutting out shares like AnklerMittel, but you'd find a share like AnklerMittel, for instance, underneath the the additional advisors. Okay, so if this list does not show you Ankler Mitchell, you'd find it on the other list. Okay, so over here we're going to change this to greater than minus 15. Now the reason we're doing that is so that we cut out shares that give you like that 98% drop. Okay, so you only find shares like this, which is in a bullish trend, more or less. Okay, so that's basically what you're doing. You're telling this filter to only give me shares which is in a positive, but has a upwards movement. All right, and then over here you find your T1, T2, and T3. All right, 20-day, 10-day, and 5-day moving average. So those are moving averages. We're going to quickly go and add on our charts IQ. Okay, so if you find your share which you're happy with, just going to click on a share and go to charts IQ, and you're going to start adding your filtering. Okay, so I'll explain the buy and the sell levels now. Okay, because this one you actually need to reverse read. You're not going to go for buy. For instance, you're going to start off with a sell. If you look at your share filter example, a sell would be a watch list share, and then you wait for your first buy, like buy, sell, or buy, sell would be your possible buys. Buy, sell, buy would be a possible late buy, and then buy would be a possible buy, but also risky, and also don't buy. All right, so the reason for don't buy is because the share is already really high. Okay, but it would be a risky buy if you take it as a possible buy. All right, because the shares already started to move. Okay, if it's a sell, it means that the share is actually still going down, but you're waiting for that first buy indication, which I think this one actually already had to give us, because it's still giving you the sell, but we'll go and have a look at now on the chart why it's not giving us any buy indications yet. Okay, so I'm leaving the 200-day moving average line because it's really important. I mean, we can see that ABG Absa Group is currently below this line. Okay, so this one is giving us a sell. It looks like that this one we'd actually be able to buy, but we'll go and explain with the RSI and the stochastic later on how you're going to implement this then to see if it's a real buy or not. But this, I think, is a really good start to buy a share would be on ABSA, all right, because it's starting to turn around. Now, first moving average, you're going to go to studies, click on moving average, change that period to 20, and give it another color. So it's always important to give your moving averages a color so you know which one's which. So orange, for instance, in this case would be our 20-day moving average, and create it, and it'll give us our 20-day moving average. Now we'll see why it's not giving us a buying indication. Now, first of all, the reason it's giving us the sell is if we take a vertical line, it's basically because of this crossover it gave us over here. All right, so over here it went up. There was a buying indication for this trend over here. That's a selling indication, so it's crossing in a downward trend, and there's no crossover here as of yet. Okay, so that's why we're still having a selling indication. We don't have any buying indication yet. All right, so you would wait for the next green candle to cross over with your 20-day moving average before you would buy. Okay, but there are other indications, like for instance your RSI and your stochastic, which would have told you that this is actually a good time to start buying some ABG shares. But there's other things that you can add onto it as well to see that. Then the other moving average, the next one. So the first one is giving us the selling indication we want to buy, or we want to wait for that first buying indication. Second one would be the 10-day moving average. So this time it's not about where it crosses through the price. It would actually be where the 10-day crosses through the 20-day. So if I go to studies, moving average, and change that period once again to 10, change the color, so another color for the next one. So let's make it purple and give us this purple line. So we'll see that our purple line, the 10-day moving average, has not yet crossed over with the orange one, the 20-day moving average. It only crossed over there, okay, which would be a selling indication. So still giving us that selling indication where it crossed over in a bearish trend, in a downward trend. Okay, there's no crossover in a bullish trend as of yet. You want that red line and purple line to cross over into a bullish trend before you start buying. Okay, like for instance what I did over here, or what I did over here. Okay, and then the last one would be your 5-day moving average. So we're going to go back to moving average, change that to 5, give it another color. So this one will make black, and create and then this one, basically your 5-day moving average, needs to cross through both your purple and your orange, both your 20 and your 10-day moving average, before it starts giving you a buy indication. So for instance, like what it did over, yeah, all right, so it crossed through the purple line, through the orange line, and then gave you a buy indication. All right, so over here, for instance, you would have had a triple buy indication. All right, so that's why a triple buy indication would be really I wouldn't say it's a bad thing, but it can be a bad thing in a sense of, let's take this trend over here. Okay, over here you've got a triple buy indication right over there. All right, all the lines crossed over. The 10-day of the 20-day through the price, the 10-day through the 20, and the 5-day through both. Okay, so for instance, if it's giving you a buying indication, all three of these. It can even give you a buying indication of way up at the top here. Okay, where they've crossed over on the 29th of the 7th. Okay, let's take it over there. So on the 2nd of 8, 2021, but it's going to give you a buying indication all the way to more or less over here on the 1st of the 9th. So in entire month, it can keep on saying buy all the way up until here, where you've got your first crossover where it starts to tell you to sell. Okay, once you start seeing a sell buy, it means that your first indication has already crossed over. It's already going down. Okay, so then you get your second indication would be sell, buy, and the last indication would be a sell. Right. So sell can also be a bad thing. That's why we say that it's a watch list share, because you're keeping an eye on that share and up until the point that it gives you your first buy indication, which is usually your 20-day moving average. Okay, like over here, your 20-day moving average would be your first one to cross over. Okay, crosses over and then it gives you a buying indication. Second one crosses over, which is your 10-day moving average through the 20, gives you next buying indication. Sometimes you'd even find that you can work with a sell buy, right? Like in instance over here, 20-day moving average crossed over, and then your 10-day immediately crossed through of your 5-day, crossed over your 10 and your 20 before your 10-day had a chance to cross over. Okay, which would be a sell buy. All right, so that's why we've got that listed underneath the share for example. Sorry, sell buy. So sell buy, possible late buy. Right, sometimes it works that it's a possible late buy and risky, but in that case, it would have been a possible buy. Okay, so moving averages is a bit of a confusing situation to work with, because you need to look at all the crossovers. Do they all crossover at that point? And then where is it sitting if it's giving me a triple buy indication? Okay, because that would have been a triple buy, and it would have been really late and a high risk to buy over there, because it turned around immediately and started to say sell. Over here, we still have a sell. No crossovers as of yet. Okay, no crossovers at all. Okay, but the share price is starting to turn around. Okay, so that share, for instance, like ABG, I would go and add onto a watch list, right? Because sell is a watch list share. If I look at BID, for instance, it's giving us the first buying indication. So it means that the 20-day has already crossed over. So if we go to BID, okay, we'd see that the 20-day has already crossed over. Okay, so the 20-day has already gone through through your candle. Okay, so now we just need to wait for the 10-day and the 5-day to cross over as well, to give us the next buy, to get a buy, sell, and then the last one to cross over to give you a buy. Okay, then it means that you'll be able to get into the market and buy some shares on BID. All right, so this one would be a better one to look at now to buy than what ABG is, because it's already giving you the first crossover. Okay, but Absa, for instance, would be a watch list share. Not to add the share onto watch list, just click on the share and click on add to watch list and add your comment. So I'm going to do the same thing which I always do, add the date and say submit, and we'll add it onto my watch list. Okay, and a share like BID, I would go and buy, right? Because it's already giving me the buy indication, and I can see that my 20-day has crossed over. All right, so I would be able to, for instance, buy, and it's also crossing through the 200-day moving average, which is a good thing. And we've got a positive trend between those 2 points. We've got a positive trend. Okay, so the trend is going up. We have a buying indication, so it might be a good buy. But there's other things that you also need to go and look at, which we're going to quickly look at with the additional advisors. Okay, so that's the share filter. The share filter is a little bit more advanced. Look, the additional advisor also advanced filter, but it at least tells you what the charting is currently doing. So you can use both of them together if you really want to. Okay, see what it's doing on the share filter and also see what it's doing on the additional advisor. Now, the additional advisor, how it works is it works directly from some of the advisors which is underneath studies. So, for instance, like your RSI, your Stochastic, and your MACD. Okay, and also your 200-day moving average. So the first one is the MACD, moving average convergence and diversions. So basically, it's tell you if the share is currently converting or diverting, is it going into a bullish or a bearish trend? But we don't really use the MACD on here. We usually use RSI and Stochastic on this list. So RSI is your relative strength index or indicator. So it tells you what is the current strength of your share. Is it going up? Is it going down? So if it gives you a buying indication, it means that the RSI is going up, right, or is low. All right, so it doesn't usually mean that your RSI is going up. It just tells you if your RSI is low, below your 20%, which I'll show you now how to read. Your TSF time series forecast gives you more or less a forecast of the share. Um, is the share going into a buying trend now, or is it going into a selling trend? Then you've got your long, medium, and short term. So long would give you a share which is more or less always in a bullish trend, right? So for instance, if we look at this trend over here, that's a long, right? So this would be one of the shares that your list would give you is BID because it's a long. Okay, so if it gives you a buy, then it means that it's part of the long list. If it's a medium term share, it's not over that term, it would be over a shorter term. Okay, if it's a short, it would mean, for instance, like the short burst over here. All right, so it would be a short-term investment instead of a medium-term or a long-term. Okay, and then SMA, simple moving average, that is usually set by default to 40. You can go and change it to 200. So you only find shares which are above the 200 moving average line, but you obviously need to add that filter for it to really work. So you just go to preferences, top right hand corner, go to charting, and then scroll to the bottom. So the period is equal to 40. So it's defaulted to 40. You can go and change it to 200. Click on save, and it'll change that specific filter, simple moving average, to a 200-day moving average. Okay, and then the stochastic more or less works the same as the RSI. Both of them are parts of the oscillator family. So in this case, we would be using the stochastic because that is usually like a confirmation indicator. Okay, the RSI you only use on your chart. You can use it here as well, or you can use RSI and stochastic on the same list, but we're going to work with long and stochastic. Okay, Sharetrackin 2020 we would explain in tomorrow's webinar. Okay, so over here, it will give you the code for the company, the name for the company, the closing price, and the volume. All right. So by standard, that's what you're going to what you would find. I think if you click on reset filters or clear advisors, so reset filters, that just usually resets your filters. So if you put in any filters, it will reset it for you. If you click on clear advisors, it will remove any advisors that you've put in. So we're going to put in 2. So we're going to click on long. So then we'll pull in all the shares. So the moment you click on long, it's going to pull in each and every share on the list. Doesn't matter if it's a medium or a short or anything. You would be wanting to look at the buying indication. So if it gives you a buy, it means that it's a long. So all these buying indications, that would be a long indication. If it's a sell, it means that it's not a long. All right, it means that the share is actually going down in the long run. If it's telling you a hold, it means that it's been going sideways, okay, for a long time. So sell, downward trend, right? Overall downward trend. Hold, sideways trend. Buy, overall upwards trend. So that's what you'd want, is the buying indication. Okay. The next one would be a stochastic. So that would be the next indicator that we're going to use. And this one basically tells us if it's a hold, it means that your stochastic is going up, right? It's already in an upwards trend. Right, it's already heading up. If it's a buy, it means it's just below the 20% mark on the RSI. Oh, sorry, on the stochastic. Okay, which we're going to go and have a look at now once we've done our filtering. So we're going to change our volume over here to greater than 100,000. Now this time 100,000. Why? Because that's volume. That's not value. Right? That's the amount of shares that's been traded for the day. Okay, not for the last 22 trading days or the last week. That's for the day. So the amount of shares that people have been trading for today. Okay. Then long we're going to change to buy because we want an overall upward trend. We're going to change that to buy. And then also stochastic, we're also going to go and change to buy. So we want two buying indications. So we want an overall upward trend on most of our shares. So you'd sometimes find that you would find a long list of shares to work with. Okay, a really long list of shares to work with, but that's only if you work with the list after hours. If you work with this list during trading, your trading day from 9 to 5, your list won't be this long. So it's only when you filter after hours that you'd have a long list. Okay, but that means that you've got a really long list of shares to work through. Okay, so you can even shorten the list by going and adding RSI as well onto your list. Okay, and then let's just say reset filters, so it clears it, and then change that greater than 100,000, and then go and give it a triple buy indication, right, to shorten your list even more. Okay, so you don't have a long list after hours. Okay, so during trading hours you can only use long and stochastic, but if you don't want to work through a really long list, add RSI as well to make your list even shorter. Okay, so the shorter your list, the better, because it means that you don't need to do as much work on that list. Okay, so from here you can go and start to analyze your shares. Okay, so first of all, you need to go and select your share. So let's say select Discovery Fins, so DSY. So you're going to click on your share and click on Chart IQ. All right, so it's going to give you your charting page. Okay, so next thing we need to look at, you can still use your moving averages from your share filter. Use share filter, so you can keep in your 3 moving averages if you want to. If you don't want to, just right click on it and say delete. All right, you can remove those moving averages if you want to. Okay, or you can just keep them in. So currently we can see that this share is below the 200 moving average. Okay, which might be a bad thing, because we said that we don't want your share to be below this 200 moving average. But also we need to remember that the overall trend for the from 2020 has been upwards. Okay, this downward spiral that's doing here is because of a retracement. The share is currently retracing in a downward trend because why? It's been way above. It's been overextended above the 200 moving average. Remember in the beginning when I told you HCI is 100% above this your 200 moving average. That might happen to HCI. It might retrace like this. Okay. But now we need to go and look at RSI and stochastic. Where is it currently sitting? Is the share actually a buy now? Okay, has it got potential to go back above this 200 moving average, above this 200 moving average? Okay, so this share, for instance, would be a watch list share, unfortunately, because it's below this 200 moving average. But we need to go and add the RSI and stochastic to confirm that. Is it even a watch list share? All right. So we're going to go and add RSI first because that is our main indicator. All right, so RSI relative strength indicator, which that would be our main indicator. We're going to change the period from 14 to 3. Reason we do that, if I just click on create, I mean, and 14-day RSI is really hard to read. You can't really see where the buying and selling indications is. You really need to zoom in to see if that's a buy indication, which is actually a buying indication, but it's really hard to see if it's really a buying indication. So we usually just change it to a 3-day RSI, which is much easier to read. You say and create, then you'd see now it just zooms it in for you, and we'd see that yes, we do have a buying indication currently on our RSI. Okay, now how do we know that? So first of all, it's got 2 lines. It's got a 20% line and it's got an 80% line. Okay, anything below the your 20% line is a buying indication. All right, anything above your 80% line would be a selling indication. So over here, that's your oversold position. Over here would be your overbought position. When it crosses over in an upward trend like over here, If it crosses through your 20-day in an upward trend, that is a buying indication. If it crosses through your 80% like over there, that would be a selling indication. Okay, so currently it's giving us the buy indication because it's crossing through your 20% line, but there's an easier way to read your RSI. Okay, so that stays the same, 20% and 80% overbought and oversold. We don't want to buy in the overbought area. We don't want to buy above this 80 line. We want to buy below this 20 or even just this above. I mean, I think 30% would be the cutoff because the default RSI is actually 70 30 and not 80 20. Okay, but we want you to buy as low as possible because the lower you buy, the better, all right? Because it means that you're buying it at a way cheaper price. Okay, so currently we have a buying indication over here. All right, so next thing we need to do is to see if it's really a buying indication, which would make your life so much easier if you go to studies, go to moving average, right? Add an extra moving average, but we're going to add it onto our RSI, not onto your main chart, right? Like all these three moving averages that we've got on the main chart. We're going to change the period to 3, go to field, and set it on the RSI. So remember, the close field is your main chart. The RSI is the chart at the bottom here. Okay, then change the type to exponential. So simple moving average would be a more of a smoother line. Okay, like for instance on our main chart, you'll see that it's a smoother line running with your price, but we want to hug the RSI. So we're going to change it to exponential and say create. And you'll see it hugs this this main line. You'd see if you change this line just to show how tight it can hug it, change that line to 1. It's literally on top of the RSI. Okay, so you don't want the interval to be 1. You want to just change it to 3 and create, and then we'll separate from it. So now you'd find earlier buying indications. Okay, you'd see exactly when to go and buy your share by looking at the red line. Now the red line that we've added, that counts as a signal line. Okay, now a signal line tells you when to buy and when to go and sell. So when your red line crosses over your black line like over there, okay, in an upward trend, that would be a buying indication. If it crosses it in a downward trend like over there, that would be a selling indication. Okay, so that's your sell indication, and that would be your buying indication. That's what we've currently got. We've got a buying indication telling us that we can actually buy on DSY. Okay, and we'll see that the relative strength is going up. Okay, so the black line, that is your relative strength index. The red line is your signal. The signal is giving a buy, and the relative strength is going up, and it's crossing over your 20% mark, going upwards. Okay, but still we don't know. Can we really buy the share? We need to go and add the stochastic next. Now the stochastic works more or less the same, but it already has a red line in it. You don't really need to change anything in the stochastic. It's already a 14-day, but a 14-day stochastic is easier to read than a 14-day RSI. So we can just say create, and it's going to create the 14-day stochastic for us. Okay, now same thing or same principle applies. You've got the 20% line and you've got your 80% line. Below the 20%, that's where you would want to be. You don't want to be above your 80% line. All right, on any one of these, you don't buy above that line at all. Okay, you buy below the 20 or just below it, or as I said, even just below the 30%. So we can see that is a buying indication. All right, we've got a crossover over there and a crossover over here. So both of those are giving us buying indications. And then obviously the price, because of those buying indications, the price that go positive. All right, but there is a few other aspects that you would need to go and have a look at, like conversion and diversions. All right, so conversion and diversions also a really important thing, but that we will explain in tomorrow's webinar with the CFDs. Okay, so I don't want to give too much information on ones with the equities because in the CFD video we would be covering the conversions and diversions as well. So for now we're going to stick to the basics on equities, which would be a buying indication on the RSI, and that would be a buying indication on the stochastic. Okay, if we go back in history, even there was a buying indication over here with another buying indication over there, and then we had a positive on that day, and the price started to move. Okay, but as I said, there's other easier ways to also see if the price is really going to go up from there or not. Okay, but that counted as a really good buying indication. Buy indication, and the share price started to move. Now we've got more or less the same thing. You've got your 5-day moving average over here crossing through your price, so you can always look at your 5-day moving average also for let's say if you want to do a trade, a short trade, then that 5-day moving average in this case would have been a crossover for a buying indication. You've got a buying indication down here on RSI and a buying indication down here on stochastic. So we've got 3 buying indications, which means that we can go and buy DSY. So discovery, triple buy indication was a true buying indication. Sometimes you would find that if you go to a chart, let's take AEG and see if it's one of those. Yes, so if we look at AEG, for instance, yes, it's giving us a buy indication, but we'd see that it has no crossover on the RSI at all. Only on the stochastic there is a crossover. So how it actually works is that what this filter does is it only shows you where the lines are currently sitting. Okay, it doesn't show you the crossovers. It only shows you where is the RSI and the stochastic currently sitting at. So if you look at AEG, it tells you that it's sitting below the 20%, over here below the 20%. It doesn't count the crossovers. Okay, so discovery was a good one to go and select because there is crossovers. So it's really important when you go to a chart to understand that if it says buy, that it won't always be a buy or a buy indication. Okay, it's because it only keeps in consideration where it is on the chart and not where the crossover is on the chart. Okay, so discovery would have been a really good let's put it this way, a guess that share is going to go up when we clicked on it. Okay, but I did do some technical analysis previously on discovery also, and that's also why I selected it. Okay, because of the crossovers that it currently has. All right, but that would have been a really good indication of the share going up. So we can use this one as an example. All right, to go and buy. So how to do that? First thing is we know what our code is. It's DSY. We know what the company name is. It's Discovery. So we need to go and calculate now how many shares do we need to buy, okay, for us to be able to have a low break-even point. Because the lower our break-even point is, the better for us, because it means that we would be making money much quicker. And for that, we need a calculator, which is underneath calculators, and we click on investment calculator. And over here, this is where we're going to start calculating how many shares do we need to reach a good break-even point. Okay, now a good break-even point on the software is about 4%, or anything below 4%. You don't want your break-even point to be above 4%, all right? Because it means that you'd be waiting longer before you start making profits. Now, how does the break-even point work? So first of all, you can type in your code. All right, there would say start typing to search, type in your code, click on your company, and then it will auto-fill. So there's our share code, DSY, with the current price, and then we need to go and fill in the quantity. So I'm going to use a really good example of one. Okay, so one share, only one share. So one share, if we have to buy one share, break-even point percentage is 197%. So it would take, the share needs to grow by 197% before we start making profit. Now, why is that? If you have to take your price, so look at what your current price is, 139.36 per share. Okay, your brokerage, your buying brokerage, so that's your buying brokerage, 137 rand 77. So it's almost equal to what our price is. And then our selling brokerage is 137.42. Right, also almost same, almost equal to what our price is. Okay, so these two together is greater than what our price is. So if you take 137 plus 137, it's going to be way more than what our current price is. So your brokerage would be more than what the actual value of the share is, and that's why break-even point percentage is so high. So for you to really start making profit, the share needs to grow from 139.36 to 414 rand and 55 cents before you start seeing any profits, because you first need to make up your brokerage fees, those two. Okay, so you first need to make up your brokerage before you start making any profits. Now the total that it gives you here is only your price plus your brokerage gives you your total. Okay, but when you go and buy a share, it also keeps in consideration your selling brokerage on the percentage. Okay, so your total doesn't keep in consideration your selling brokerage. Your total only keeps in consideration your price and your brokerage, but your break-even point percentage keeps in consideration brokerage plus selling brokerage plus your price. Okay. So what do I need to do to get that break-even point percentage lower? I need to buy more shares, right? So I put in an extra 0. Now it's 19%. Now the share only needs to grow 19% before I start seeing profit, but it's still too high. You want that to be below 4%. Now the easiest way to get that below 4%, I mean, you can go and play around. You can go and say, okay, 120 shares. Obviously, that's going to be below 4%, but it's going to cost you like a lot, 16,900 rand before you which you would need to fork out to buy that share, but your break-even price would be 142. Your break-even percentage would be 1.89%. So if you reach 1.89%, anything past that would be profit. Okay, but 16,000 is a bit expensive to buy some shares. So we would want to buy a lower quantity. Okay, so you can play around with it. You can go down to 60. Okay, 60 also seems like enough. So let's go to 55. 50 shares. So 50 shares would see just out of reach. So let's go to 52, 53. So 53 is just below 4%. It would cost us 7,541 rand to buy the shares. But there's an easier way on calculating that. You don't need to play around with the quantity like that. You can take a calculator. And work that out. Okay, sorry. So you can work that out. So to work out how many shares you need, all you need to do, we can see that 7,541. So what I usually do is I take 7,600. Okay, now how do we know to use 7,600? Okay, it's because we've been playing around with the values on most shares. Okay, all shares in this case. I mean, you can take Naspers Process, you can take Discovery, you can take Coronation, you can take any share. Okay, take 7,600 rand divided by the price. Now the price in this case is 139.36. Okay, and that will give you the amount of shares that you need to buy. 54 shares. Okay, we bought 53, with just below 4%. All right, so you can take 7,600 divided by the price would give you the amount of shares that you would need to buy to get your break-even point below 4%. Okay, so if we took 54, I mean, that would have been 7,681. Okay, obviously our brokerages are included. Okay, so the calculator doesn't keep in consideration your brokerages because you didn't sell it to. Okay, but we can go with 53. Right, so 53 shares is the amount that we need to get it below 4%. So it means now when we reach 144 rand, we would start making profits. Or when the shares grows to 3.97%, we would start making profits. So it's basically a brokerage plus selling brokerage. Okay, so 155 plus 137 is 3.97% of our total. Okay, so we need to make that up first before we start making profits. Okay, so now we know exactly the amount of shares that we want to buy. So now we can go back to search or back to the analysis. So we can go to analysis, stocks, additional advisors, and do the same filtering again. Or you can just go to search and type in your code, DSY. Click on your share and say buy shares. All right, so we're on the simulation account already. Okay, just see to that you select your correct account. It will show you the company name, the company code, the date, the last trade price, the max you can afford to buy, and then you need to fill in the amount of amount of shares that you want to buy, and also the comment. Okay, so first of all, we already know the amount that we want to buy. That's 53 shares. So it will give us a break-even point percentage of 3.97%. And then a total cost of 7,541 Rand and 98 cents. Okay, and then we need to enter our comment. Why is it that we want to buy the share? Now, once again, it's another rule in the T's and C's. You need to add one technical reason, one fundamental reason, or two technical reasons with two fundamental reasons. So always two reasons. So technical reasons you would find from your charts. You would go and say, for instance, in this case, RSI has crossed in a bullish trend, right? Or your signal line has crossed through the RSI in a bullish trend. On your stochastic, the red and the black line has crossed over in a bullish trend, right? So there's a crossover there, and you can also mention that your price is positive because of your RSI and your stochastic crossing over. Okay, those are two technical reasons. Fundamental reasons you would find from your research. So on the chart, top right hand corner, or left hand corner, sorry, you'll find undo, and then your select tool, and then research. So you can go and click on research, and this is where you would find, so you can make this a bit bigger. This is where you would find all your fundamental reasons. So your directors dealings, for instance, if you want to work on your directors dealings, we'll see that H.L. Bosman, for instance, has bought now on the 26th of the 4th. He has bought some shares, okay, in Discovery. Most of them previously have sold, so you'll see that some took options, most of them sold, but Bosman bought. All right, so that one guy out of all of them is the only one that bought in the last couple of days, okay, or in the last month. Okay, so he's the only one that bought, so something might be up. And you can also go and Google a bit who is H.L. Bosman then in DSY, so you can get a little bit of background on that specific director. Okay, you can even go on dividends. When is the next dividend payout? We'll see that the last dividend payout on Discovery was in 2020, so we can't go on any reasoning with dividends because we're not trading for dividends on DSY. So our dividend is basically an amount that would be paid out towards you if you trade with the share or invest with the share for a certain time period. So for instance, if I had to go and invest on Discovery, let's say for a time period of 6 months or a year, then in that last trade date, right? So before that date, I would needed to go and invest in that company to be able to qualify for the dividends, and then I would be paid on the 23rd of the 3rd in 2020. I would be paid 81 cents per share that I own. Okay, so that would be let's say like a thank you towards you because you're investing with the company. Okay, so you also get rewarded. So you get three types. You get a final, which is usually with a final year-end results. The interim would be in the middle of the year end, and then a special. If the company is like really doing good, sometimes they will do a special as well. If you look at BTI, for instance, British American Tobacco, you'll see they will usually have an interim special final, interim special final, interim special final. Okay, until a certain time period they stopped with that, and now it's only interim and final. Okay, some companies would only do finals, some of them only interims. Okay, so it's not always 3, not always 2, it might only be 1 per year. Okay, depending on how the company does. Sometimes nothing at all, like for instance Discovery, there's nothing for the last 2 years. Okay, but it's understandable with the current economy, the companies are struggling a bit, but some of them still do pay out. Okay, financial statements, you can always go into financial statements, but I tend to not look at the financial statements for any reasoning, because you're not going to look at any growth on their portfolios, anything like that. For that, you'd usually go and read up the news on what other investors said about their financial statements, okay, which would play a big role. So news on a financial statement would be greater than you actually looking at the financial statements. Okay, and then market news. Also a thing that you can use, go to the market news, you can always go and read up some news on that company. So you'll see on late 11th of May, there wasn't really any news, so that would have been a Sense News, for instance, but there was some news. Okay, so on 9th of May, Discovery Limited appointment of director to the board. So that was a board meeting. that they held, and you can read through that entire meeting. So some notes that they had for that meeting. So sometimes you'll find that there might be a director change, there might be a CEO change, there might be some new product that a company has launched which would push the company up. Sometimes they might even talk about some extra money that they've pushed in, and say for instance like it made the company grow for the last month with 14%, and that would pull investors because wow, 14% within a month, why not invest into it? Okay, so you'd find some news on companies and also use that as a reason for your buy. Okay, so the combat is really important. So too technical or too fundamental, or one technical with fundamental. Okay, so I'm just going to say test for now and then confirm buy. And then it's going to confirm that it's going to buy that share, and it's going to be on our dashboard, investment dashboard, and there's our share. Okay, so you'll see that our brokerage was deducted, so 293.33 in total on our brokerage. All right, so brokerage through Standard Bank is expensive. So our software works on Standard Bank's brokerage fees. Yeah, 110 Rand per investment or per trade. So it's 110 Rand for your buy, 110 Rand for your sell. Then obviously on top of that, you've got your VAT, your straight, your IPL, and your STT, securities transfer tax. All of those together, 153 on our buy and 137 on our sell would give you 293 in total. Now, if you go through easy equities, it won't be that expensive. Okay, so Standard Bank is because the reasoning behind that, why they're so expensive, is because now on Standard Bank, if I bought it on Standard Bank, I can go and set up a stop loss. I can go and set up a SMS notification on it, so that the share, for instance, auto sells. And also sends me a notification once that's done. I get decent statements and all of those types of things, which makes them more expensive. All right, all extras. So they charge you for all the extras. Okay, that's why the brokerage is so expensive. But if you go to easy equities, no, the only con with them is the real pro is the brokerage is cheap. Okay, it's 0.625%. So it means that if you put in 1,000 Rand, you would only be paying I think they even lowered it now recently. I think it's now like something like 0.593%. Okay, but as far as I know, before the change was 0.625%. So it means on 1,000 Rand, you would be paying 6 Rand 25. On 10,000 Rand, you would be paying 63 Rand. Okay, yeah, 62 Rand and 50 cents. All right, so it's way cheaper to go through easy equities if you want to invest. Okay, the software doesn't work on easy equities pricing. So remember, the software is educational. So we educate you on how to invest and how to trade. So we've been using Standard Bank for years. So you would be using Standard Bank's brokerage fees, all right, on our software. But once you start trading, investing live through easy equities, then you would be paying a lower rate. Okay, if you want to trade and invest at the same time, then you will be using Standard Bank. Okay, or you can open one account through easy equities and one account through IG and not pay the higher brokerage. Okay, but then the only con is, once again, you can't set up stop losses through easy equities. Okay, you need to go to the software to set up your SMSs. Okay, so to set up those SMS notifications, you go to action. Remember, this works on percentages. It doesn't work on your brokerage. Okay, so this works on percentages. So it would be a wiser idea to go and set up your SMS notifications so that when you trade through easy equities, so that you at least have a notification from our software side notifying you. Okay, but as time goes along, we will be adding places like easy equities and IG, and APSA and Netbank and FNB's brokerages as well. Okay, so that is on pipeline. So if we go to action, it will give you a small graph already with the preset values for your stop loss, your target value, and your gross stop loss. But we need to go and set up that now for ourselves. Okay, so we're going to go to set stop loss and then change our values. So first of all, target value of 10% is more than enough. Don't go more than that. Don't be greedy in the beginning. Okay, you can even lower it if you really want to. What I usually do is I change that to 4%. Okay, so for me personally, 4% on my target is just so that I know exactly when I've broken even. So because my overall movement over here is minus 3.82%. So if I reach 4%, I know anything past that is profit. So when I get that, then I know, okay, I've broken even now. I've made my brokerage. Okay, then I go back into the software and I change that percentage to 10. right? Because now I know if it reaches 10%, then it's pure 10% profit. Okay, so you can go and change it in a later stage. All right, but if you don't want to do that, keep it at 10%. Don't change it. Okay, then your stop loss percentage, it basically exactly what it is. It's a stop loss. So you're stopping your losses at 5%, but that's from the current price. Okay, that's not from the price which it grows to. Okay, that's your gross stop loss. That's the one where it grows to, and the stop loss is from the current price. So if we have to go and look at this current chart, okay, the stop loss would be set. Let's just give it another color, so red. So right over there is where our stop loss is set at, right there. So we bought the share there. So if the share price, let's take for instance like over here, if we bought the share there, the share grows all the way to the top of there, but then it starts falling back there, and only 5% or 10% after that, it would it would send you a notification. It means that you lost all of that growth that you made there, and only there it notifies you. Okay, that's not what you want. That the reasoning for the stop loss is if the share falls from this point now. Okay, so if the share falls from this point 10%, okay, then it'll notify you, okay, you've lost 10% on the share. The growth stop loss works the other way around. So how the growth stop loss works is if the share price grows and grows and grows, that line would be moving. Okay, so it would move with your price. So from the price you bought it at, so you bought it down here. Okay, stop loss line moves. Okay, to the next point, to the next point, to the next point. So it keeps on moving as your share price grows. So it'll go all the way up to there. Okay, and if it falls, let's say 5% from there, it will notify you. Okay, listen, I've gone down by 5%. That means that you're still sitting with a profit between that point and that point. Okay, so that's a gross stop loss, and we also call it a trailing stop loss. So it trails the ruling price. Okay, a stop loss, normal stop loss doesn't. It sticks to that point. Okay, so it means that 10% would be more or less down there. So that would be your normal stop loss. Gross stop loss would be from basically it grows as your price grows. Okay, so if your price grows and grows and grows, it sets itself in, all right, at that point, and then if it falls by 5%, it notifies you, so you're still sitting with that profit. Okay, so you want to set up both. So on a stop loss, 10% is more than enough. You don't want to set anything more than 10%. So the T's and C's also tells you that a 10% stop loss is what you need to set your shares at. You can make even less. Sometimes I even go lower. I go at 8%. Okay, but don't go lower than 8% on a stop loss. So 10% or 8% is more than enough. So me personally, at 8% stop loss works. And then gross stop loss, I usually set to half of what my stop loss is. Okay, 4%. So it means that if the share grows from this point up until a high point and 4% after that, it notifies me. Then I go and analyze the share. Okay, I don't immediately go and sell. I first analyze the share, go and see where is the share currently at with the stochastic, with the RSI, with my moving averages. What are my moving averages telling me? Is it a selling indication at that point? If it is a selling indication, I sell it. If there's no selling indication at all, then I don't sell it. All right, then I keep it and I reset my values. Okay, I reset my gross stop loss pricing, I reset my stop loss pricing, reset my target value pricing, and then I just update my values again. Okay, or just update my percentages. Okay, with the current price. Then you need to enter your cell phone number. So you put in your cell phone number and you activate. Right, once you've said activate, you can update your values. Right, but there is another option that you can tick down your intraday SMS. So usually it would be deactivated. So you'll find it in this state, deactivate. Okay, so you need to activate it and then tick the intraday SMS block. Intraday SMS blocks usually send you an SMS telling you what your share is currently doing. Right, is your share price increasing or decreasing for the day? So intraday means you receive an SMS 3 times a day: morning, afternoon, morning, early afternoon, and late afternoon. You would be receiving an SMS notifying you what your share is currently doing without you even going into the charting. Your SMS would be telling that on text. Okay. If you don't want that, you only want one late afternoon or in the evening, just untick that. Okay, just untick the intraday and update your values. So now it means that you'd only receive 2 SMSs, one for stop loss or 3 different SMSs, one for target value, one for stop loss, and one for growth stop loss. Okay, if you take the intraday one, it means that you'd receive 5 different SMSs: stop loss, your growth stop loss, or your target value with the intraday SMS telling you if your share's gone up or down. Okay, but I usually prefer, depending on what the share price is, I would prefer enabling it. So if it's a cheap share, let's say anything below 10 Rand, I would enable your intraday. If it's anything above, let's say 50 Rand, I would disable it, because those shares, I mean, it's more expensive. So I don't want to be notified 3 times a day that the share price is still, let's say the share price is 50 Rand. I don't want to be notified that your share is shown by 2 cents, by 3 times a day. Okay, because it's going to be pointless. If a cheaper share moves by let's say 5 cents or 2 cents, I mean, then the percentage movement is greater. Okay, in Rand value. All right, I did make a video on that as well. If you go to training index at the top and you go watch the Sharetrackin SMS, so that basically shows you exactly how your SMS notifications work, that your target value, your stop loss, your intraday, your gross stop loss. So I explain everything over there, and also some of the golden goose SMS is explaining how they work. So you can go through that video as well. Okay, if you want to sell the share now, all you do is you go to action, go to sell, and then over here, really important, you can't skip this part. Okay, you can't skip the entering your number of shares to sell. So usually what happens is, if you don't enter that, you only enter your comment. So once again, this is really important, but this time it's only one reason. All right, you don't need to enter 2 reasons. So one technical, one fundamental. So even a comment like, for instance, stop loss reached counts as a good comment, or target value reached counts as a good comment, because those are technical reasons. You saw it on the SMS. Okay, or gross stop loss reached, you saw it on the SMS, it's a good comment. That's one reason. Or you can even go back to your charting and look at your charting and see, okay, the RSI is crossing, all your prices going negative, in a negative trend. RSI and Stochastic also going down. That's a good reason. Okay, don't say in your comments, especially with the buy, share is doing good, share looks good. Okay, share going up, that's not a reason. Same with your comment, share is doing bad, that's not a good comment. It needs to be technical and or fundamental. Okay, so good comments. So for now, I'm just going to say test, and if I say sell now, it's not going to sell it, because it tells me I need to enter a value. Okay, that's the value I need to fill in. I need to fill in 53. Don't miss that, or else the share won't sell. Right, you would be clicking sell all day and it's not going to sell at all. Okay, so you need to enter the amount into your comment. If you don't enter your comment, same thing will happen. It will tell you to enter a comment. All right, so transaction comment required. Okay, so then I enter that, and if I take that away, to also give you error, it would say invalid value supplied. That's the value that needs to be supplied. Okay, value and comments, then click on sell, then it sells the share. All right, and then there's no more share. Okay, so it would, obviously we only paid brokerage, we didn't make anything at this stage, because we only bought and sold. Right, no profits were made, we lost the brokerage. Okay, now if you go back to your that's something we missed out now on, but if you go back to your financials and you look at your safety ratchets, usually what it would show you is the name of the company, the code of the company with the cost price, last price, and then your stop loss value. So your stop loss value, gross stop loss value, target value, and then what to do with the share. So that the safety net would tell you sell, right? For instance, GL sell, gross stop loss sell, means that you need to go and sell. But the moment you buy a share, that would already been reached, right? So don't get a fright when your safety ratchet tells you sell, gross stop loss reached. Okay, because obviously the share needs to start moving now. Okay, so if it says stop loss reached, okay, then you know, okay, I need to sell because my 10% has been reached. But if it says gross stop loss reached right in the beginning, don't get a fright, because you just bought the share, so it's immediately going to say it, because when that's a 4% brokerage that you've just paid. Okay, So don't get it right once you see that right in the beginning. If it's on a later stage, like a week later or a month later, and you see that, then you know, okay, I need to go and do something. Look at the charting and then sell the share. Okay. And then there's our transactions. There's our discovery that we bought and we've sold. So this would keep track of all the shares that you bought and sold on your simulation. Okay. So that's it for the full training session for equities. I mean, it's a mouthful for 2 hours. I mean, you can always go and watch this video again. I do apologize for some of the coughing. I do have a little bit of bug in the throat. So I do apologize for that. But you can go and watch the video again tomorrow when we upload it, or during the week, so you can retrace on some of the stuff that we've just done on the webinar, some of the filtering. There are other webinars, of course, as well, that also explains the same thing, but it's not full training sessions, about 50 minutes or 30 minutes to 50 minutes videos underneath the training index. So there's Sharetrackin Basic 1, Basic 2. This is basically the two that we've just discussed. Right, Basic 1, Basic 2, and SMS notifications. Right. So we basically discuss all three of those in one video. Okay, so yeah, so tomorrow we're going to do the CFDs. So the people that did attend this webinar, I would recommend that you also watch tomorrow's video, because it is a follow-up on this video. So we're not going to start on this left-hand side with all of this again. We're going to head straight into the filtering, start filtering, buying, selling, setting up the stop losses, and also how to do conversions and diversions and charting, which is really important, right? Because you can also use it on investing. Okay, so then I'll see you tomorrow for those that did attend the webinar, and then also some new people that might join us tomorrow as well. Okay, so enjoy the rest of the evening, and see you tomorrow.